Hello there, Hector Davil here. In this particular video, we are going to talk about trading journals and why it is important to keep your own trading journal. Now, what is it? What's the definition of a trading journal? Well, let's say that's some sort of a statistical report where you log every single trade that you take. All right. Basically, what you want to do after taking any particular trade is to take a quick note of the main characteristics of such a trade. For example, what currency pair was that trade taken on? What time frame? Whether it was a win or whether you scored a win or a loss, and if so, by how many pips? Did you trail your stop loss? If you trailed your stop loss, did that trailing stop loss get hit at all? Or was your final target was hit? What was the risk-reward ratio on that particular trade, etc., etc. Basically, the key points, the important factors, the important elements on every trade. So, and here's why it's so important to keep a trading journal. Once you've taken or once you've registered enough trades, you will have a large enough spectrum of information, and therefore you'll be able to draw statistically significant information out of your trading journal. You'll be able to determine what are your weak points, in which specific areas of your of any particular trading system you need to focus your attention. You need to improve your trading conditions and especially your trading results. In what specific areas you are doing a good job and you want to keep on doing whatever you are doing, etc., etc. Again, once you have enough information, let's say once you've taken 30-40 trades on any particular trading system, you'll be able to determine or to pinpoint or to find some trends and some recurring mistakes, some recurring errors that you will be able to polish out over time. All right. But again, before you can polish them out, you've got to be aware of those recurrent problems, and that's what a trading journal is going to help you with. All right. Now, I've had my custom programmer develop my own tool, my own trading journal tool, which I use myself on a daily basis. Is basically the tool I use myself in order to register my own trades, and I want to give you guys free access to it in case you want to use it yourself. My recommendation: do use it. All right, do take advantage of it. Do record or register every single trade you take on my own custom journal. All right, and over the following minutes, we are gonna go through all the different aspects, all the different characteristics of my trading journal. I'm gonna show you how to use it, and again, once you've taken enough trades, I'm gonna show you how to analyze that data. All right, okay, let's get going. Alright, well, first of all, as you click on the access link to the trading journal, which is, by the way, right under this video, obviously you need to sign up, you need to create your own account, right, to the trading journal. Simply click on the sign up button and fill out your desired username, password, etc., etc. Then you will be sent an email, confirming that you've indeed created your account, and then you will be able to start using the trading journal in itself. Anyway, once you've logged in, you will find a number of different links, a number of different options on the left, on the left sidebar of the trading journal. All right, there are three specific areas or sections on that sidebar. The first one at the top is where you punch in your trading information. Okay, your trades, your trading systems, your account, etc., etc. Here is where you will find charts related to the actual trading system, and down here is where you will be able to access the different charts for the trading account. Now, don't you worry, we are gonna go through each of these different options one by one, and just to make sure that you fully understand how to use the trading journal. Okay, let's start off with the trading data section. Obviously, the first thing you need to do is to register your trading account. Now, don't you worry, you don't have to link your your actual Forex platform with the trading journal in any way. You are not gonna have to disclose any private information here. If you simply if you simply click on the accounts enter new link there, you will see that you just need to fill in 3 pieces of information. Today's date, so the trading journal knows from which specific date to start running the calculations from. Obviously, you want to enter today's date. Then the account balance today, again, just enter your account balance here, for example, $2,500. Again, so the trading journal has a reference point from which to start, calculating the account's equity curve, and then any account name of your choice, such as, I don't know, my first life account, for example. Alright, and then simply click on the Save button. Oh, by the way, the account balance could be nominated in any currency. Alright, your trading account could be dollars, and therefore this would be $2,500. It could also be euros, 2,500 euros, 2,500 Japanese yen, sterling pound. It doesn't matter. Alright, it's gonna make no difference. Alright, next up, you need to register the different trading systems you're gonna try on this specific account. Click on the Enter New System link, and as you can see, the only thing you need to enter here is is basically the trading system name. For example, London Open Breakout, okay? And then simply click on Save. The London Open Breakout is one of the systems that I trade myself. If you are, for example, expecting to trade different trading systems on this specific account, simply repeat the process. Click again on Enter New, and then enter a new name here, a new trading system, and click on Save. Alright, the trading journal will remember all the different trading systems that you've entered here. Okay, obviously you don't have to enter all the different trading systems at once. You can do so at a later time. Okay. Okay, well, now that the trading journal is aware of your trading account and your trading system, it's time to start feeding the database with actual trades, right? So what you need to do is to click on the Enter New link down there. And this is the form you want to fill in every time you close a trade. So, you obviously need to select what trading system and what trading account this particular trade belongs to, then the date of entry. Simply click on the text field, and again, a calendar will display for you. The currency pair, you'll find a drop-down menu with all the different currency pairs, whether it's a long or a short trade, meaning a buy trade or a sell trade. The time frame of reference for this particular trade, whether it was a 1 hour time frame trade, a 4 hours time frame trade, a monthly time frame, whatever time frame you've taken this trade under. Then the trading session of entry. This is particularly important for intraday traders. Did you take the trade on the early London session? Maybe on the late London, early New York session, late New York, Tokyo, or if this was a long-term trade, meaning a trade taken off the daily or maybe the weekly or the monthly time frame, simply select not an intraday trade. Alright? Also, the time span, how long the trade has been running for, meaning the time span from the moment you took the entry to the moment the trade hit either your profit taking level or your stop loss level. There are a few different options. The trade may have taken less than 15 minutes, and therefore it's a scalp trade, meaning that the time frame was probably either the 1 minute or the 5 minutes time frame. If it took less than 2 hours, it was a quick intraday trade, meaning that the time frame is probably the 5 minutes or the 15 minutes time frame. If it took between 2 and 8 hours, then it's also an intraday trade. and your time frame of choice was probably either the 30 minutes or the 1 hour time frame between 8 and 24 hours, and a slow intraday trade, and therefore you probably took the trade based on the 1 hour or the 4 hours time frame, etc., etc. Okay, simply select the most appropriate options out of those 6 or 7 options that you have there. Next up, score in pips. Whether you made profits or not on this specific trade, and if so, by how many pips. So if you made, let's say, 25 pips in profit, simply enter 25. If you lost 25 pips, simply enter minus 25. As you can see, that's pretty straightforward. Now, calculating the total scoring pips for any particular trade can get a little trickier if you use a sequential exit policy. Basically, if you set multiple levels of multiple profit taking levels. All right, let me give you an example to show you how you would do it. Well, let's imagine this is your standard Forex chart. All right, that's price. And at this precise moment, you find a buy opportunity which you take with 6 lots. You enter the market along at that level with 6 lots on any particular currency pair. It doesn't really matter. Well, your trade plan is to set a first profit taking level at plus 25 in profits, plus 25 pips in profits, and you plan to exit 2 lot at that specific level. Then your second target is going to be set at plus 50 pips in profits, and you're going to exit 3 lots right there, and then you aim to leave one final lot running in the market, shooting or aiming to reach a potential final target at plus 100 pips. Your stop loss level is set 25 pips below entry price. Okay, so let's imagine upon entry, price hits your first target, then it hits your second target, but from that point on, price retraces all the way down until it knocks out, until it hits your stop loss level. So now we need to calculate how many pips in total we've made out of this trade. Well, it's pretty simple. You made 25 pips on the first 2 lots out of 6, right? So you multiply 25 times 26 plus you made 50 pips on the second 3 lots out of 6, right? So again, you simply multiply that minus the 25 pips you lost out of the final 1 lot out of 6. Okay, so if you add this up minus this final lot there, you get a total of 45.7 pips. You can round it up to 46. There is no need to get overly picky with that, and that's exactly what you would enter here. 46 pips in profits. Okay, next up, you key in the account balance before and after the trade. Okay, this is in dollars or sterling, pound, euros, whatever your account balance is nominated in. Let's say $2,500 before the trade, and then after those 46 pips in profits, you now have in your account, I don't know, for example, $2,750. Okay, the pre-entry risk-reward is the risk-reward ratio you get from my custom money management indicator. Okay, so simply key in here whatever the indicator says. As you guys know, I like to set a minimum requirement as per my risk-reward ratio on the trades, minimum 1.5 or even 2, okay, meaning that your reward on the trade is at least twice as large as the risk. Okay. Now, you need to define the trade or to label the trade as either win, loss, or scratch trade. And scratch trade is obviously a break-even trade, a trade where you come out more or less as you were prior taking the trade. Okay, so if upon calculating your net scoring pips, you are more or less around the zero level, okay, maybe 5 pips on profits, 5 pips in loss, it doesn't really matter. That should be considered as a scratch trade. So what's a winning trade and what's a losing trade? Well, let me go back into my previous example. Let's imagine that's your first target, where that's your first target, sorry, where you are gonna exit 25 pips on 3 lots out of 6. Well, if price hits your first target, you indeed close out 3 lots for plus 25 pips in profits, but from there price drops down to stop loss levels. Again, obviously that's a scratch trade. 25 pips on 3 lots minus 25 pips on the remaining 3 lots, that's obviously a scratch trade. In the other hand, if let's imagine you only exited not 13, but 1 lot on the first target, and so you make 25 pips on 1 lot, but you lose 25 pips on 5 lots, that's obviously a losing trade and should be labeled as such. Okay, in the other hand, let's imagine you exit, I don't know, 2 or 3 lots. As price hits your first target, you trail your stop loss to break even, and from there price drops down to entry level, therefore knocking you out at break even once again. That should be labeled as a win trade. Even though it may be a small win, I mean, at the end of the day, you just made 25 pips on a little portion of your trade, but at the end of the day, you didn't lose any money whatsoever, okay? So that should be considered as a win trade. Now, also, you need to label the trade, or rather the stop loss on that trade, as tight, normal, or loose. Okay, and this is somewhat subjective. You'll see as you gain experience in your own trading systems that some particular trading setups give you a rather tight stop loss, where, well, the stop loss is rather close to your entry point, whereas in some other trading opportunities you will have to leave your trading, your entry or your trade a little bit more of breathing room, and therefore you will stretch your stop loss a little bit farther away from your entry point. Okay, again, this is somewhat subjective. This is you'll be able to determine how tight or how loose the stop loss is as you gain experience and as you gain more and more trades under your belt on that particular trading system. Okay, now I understand that it may seem like this is all rather unimportant information. You are probably wondering why would you be taking notes on the stop loss size, on whether a trade is a win, a loss, or a scratch trade, on the pre-entry risk reward ratios, etc., etc. Now I know that all these may sound a little bit redundant, but you will see how once we actually move into the charts section of the trading journal, you will see how all this information helps us extracting very useful pieces of information out of our own trading, and how we are going to be able to analyze that information to tweak and to improve our trades or our trading over time. Okay, well, next up we are going to be registering information regarding the trade's stop loss and profit taking levels, such as, was your original stop loss hit? Okay, was it hit at all? Yes or no? Did you trail your stop loss midway through the trade? Yes or no? And if you did, was your trailing stop triggered? Well, yes or no? Was your final target hit or reached? Yes or no? Also, how many exit or how many partial exit points did you set on this trade? I usually set between 2 or 4 partial exits throughout the trade. If you decide to exit the trade all at once at one specific level, simply insert 1, okay? But more often than not, on most cases, this should range between 1 and 5. Now, and then we need to state how many of these partial targets were actually triggered. So let's imagine we set 4 different profit-taking levels, but only 2 of them or 3 of them got triggered. Well, that's what we would punch in here on this particular text field. Okay. And finally, was it a second chance trade? Meaning, is this the second time you are trading this specific setup, even though you may have scored a loss the first time around? You're probably familiar with the concept of second chance trades from a previous video on this module. Well, here's where you would mark whether this was a second chance trade, yes or no. Okay? Okay, well, once we finally filled in the entire form, simply click on the Submit button and the trade will be saved up on the database. And well, you would continue registering all your individual trades, building up on your personal trading journal database until you have a large enough spectrum of information, spectrum of trades, of entries, so the trading journal can extract some statistically significant information for you out of your own trading patterns. Once you've taken 20-25 entries, the trading journal is going to be able to give you some really valuable bits of information that you will be able to use in order to, again, pinpoint recurrent problems, recurrent patterns on your trading that you may want to polish out on upcoming trades. Alright, let's now review the different charts, the different reports the trading journal can work out for you. You have 2 sets of reports. One, the first set is related to the trading systems, and the other one, the second one, is related to the trading account. Okay, so all these statistics are related to the different trading systems you may trade, and these ones are related to the different trading accounts you may have. Okay? Alright, as I click on the first link, equity curve and win-loss ratio, the trading journal will ask me what trading system and what trading account I want the information for. Okay, basically I'm asking the trading journal to tell me the equity curve and the win-loss ratio for one specific trading system, right? So the trading journal is obviously asking me, okay, Hector, so what trading system out of all the ones that I've punched in before, which trading system do you want the information for? So let's just pick the system A, which is just an example. Click on Save Preferences, and then again just click on the equity curve and win-loss ratio, and all the different statistics and charts will start loading up for us. Number of trades taken with this system on all accounts, 5 trades so far. Net pip score for all systems. For this system, on all accounts, 223 pips in profit. Now, this is the equity curve for this particular system. I took 2 trades for profits, two following trades for profits. On the first one, I scored a plus 80 pips in profit. By the second one, I was already 112 pips in profits, but then I scored 2 losses in a row, and finally on the 5th trade, I made another. I scored some positive pips all the way to the final net score of plus 223 pips. All right. Now, what about the win-loss scratch ratio on this system? Well, I've taken out of those 5 trades, 3 have been wins. Obviously, this one, and this one, and 2 of them have been a loss. This one and this one. Okay. Now, second piece of information, month by month. We are gonna get the same information, but divided by the month, or structure by the month. Okay, the monthly number of trades and the monthly number of pips. As you register more and more trades, well, you will see more and more months showing up on the charts. Okay. Next up, currency pair. You're gonna get the information by the currency pair. The number of trades I've taken on each different currency pair, basically the same information on a pie chart. The equity growth on this system by currency pair. All right. And obviously the same thing by the pip score by currency pair. As we can see, on the euro against the American dollar, I've made 145 pips in profit, whereas unfortunately in the American dollar against the Canadian dollar, I've lost a minus 30, or I've lost 34 pips. All right. Again, as you gain more and more trades, as you register more and more trades, you will begin seeing trends. You will see how some specific currency pairs, for whatever reason, you just can't profit from, whereas in some others you will see that you have an easier time scoring winning trades on those specific currency pairs. Okay, let's scroll back up a little bit. Time span, pretty much the same information, but structured around the time span. You will see again some recurrent patterns. You will see over time which time span fits your trading personality better, and which one you should avoid because you keep on scoring negative results on that particular time span. Also, you will see how on occasion I explain a little farther basically the idea behind this particular report or any particular chart on the trading journal. For example, here, pip score on this system by time span. What's the premise of this chart? Well, the question we want to address is which time span is generating the best results for us. And here's the explanation. Some traders are better suited for short-term trading, and some others for long-term trading. By analyzing your results as per your trade's time span, you'll be able to determine which time frame you should steer towards in your trading career. Okay, so far, what we can see is that we've scored our best results on those trades spanning between 8 and 24 hours, meaning slow intraday trades, probably those that are based on the 1 hour and the 4 hours time frame. If after 20, 30, 40 trades, we see that this information, this trend, this pattern remains in place, well, we will know which time frames we should be focusing on, because those are the ones that are generating the best results for us. Okay, and at the end of the day, trading is all about statistics. It's all about trading with the odds in your favor. So knowing which time frames are generating the best results for you it's rather important, isn't it? Anyway, we can also base or analyze our trading performance as per the trading session, the time frame, whether those trades were long or short, whether those trades were second chance trades or not. For example, let me click on the second chance trades link. And again, we can see the information, again, structured or based around the idea of whether those trades were or were not second chance trades. Here we can see how our pip score on second chance trades, okay, basically those labeled as yes, is indeed positive. To be more specific, we've made so far 126 pips out of second chance trades on this specific trading system. Okay, that means that indeed we want to continue searching for trading opportunities, even though we may have scored a losing trade the first time around we traded that particular trading setup. Okay, so second chance trades are so far giving us positive results. If you saw that this column here was actually to the downside, well, that's a clear indication that second chance trades are not working out for you, and therefore you should stop taking you should stop taking them. Once you score your first loss on any particular trading system, you should call it a day, or you should at least start searching for trading opportunities somewhere else, on some other currency pair, on some other time frame, etc., etc. All right, here's another good one. The average pips per win and per loss. Simply click on there. And well, here's the premise. Are we efficient with our trades? That's the question we want to address here. Well, we can see how, on average, every win Every winning trade gives us 90 pips in profit, whereas every losing trade sets us back minus 24, 25 pips on average. Okay, here's a deeper explanation. You want your average winner to be always larger than your average loser, ideally twice as large or more. Otherwise, you will need an insanely high win-loss ratio to be profitable in the long run. If your average loser is greater than your average winner, you're probably letting your losers run for too long, which indicates a problem in either A, your stop-loss placement policies, or B, your discipline to stick to your original trade plan. All right? So, if you see that your average loser becomes larger than your average win, well, it means that you need to search for solutions either on your stop-loss policies or on your discipline, because probably you are letting your losing trades run for just too long. You need to exit out of your losing trades a little bit earlier. All right? Alright, let me now move into the average pre-entry risk-reward ratio, and later on we'll analyze the average post-trade risk-reward ratio. First of all, let's go for the pre-entry one. And as you can see, the average risk-reward has been 2.6. And as I explained here, you want at the very minimum to have a 1.5 ratio, or ideally 2 or better. Okay, now this is the pre-entry risk-reward ratio, which we have 100% control upon. If the setup doesn't fulfill our minimum required, we should let the trade go. We should not take that trade. Now, this is again pre-entry risk-reward ratio. We have 100% control upon which trades we take or we let go. Okay, now we are going to move into the post-trade risk-reward ratio, which is the one we don't fully have control upon, or at least not to 100% extent. Okay, here we can see that the average account growth on our winning trades is this much, the average account growth on our losing trade is this much, and therefore the ratio is 3.12. Anything above 1.5 is positive, is acceptable, and here I explain why actually. If your average post-entry reward versus risk ratio is under 1.5, that means that you must conduct a deep re-evaluation of the system and your trading, as it's very difficult to sustain profitability over the long run if you have a poor post-trade reward versus risk ratio. So again, anything above 1.5 means that you are doing a good job. Anything under 1.5, you really need to conduct a deep re-evaluation of the system, or at least in the way you trade the system, because it's rather difficult to sustain profitability with post-trade reward risks ratios under 1.5. At least unless your win-loss ratio is of 80% or more, you're going to have a hell of a time to sustain any profitability if your post-trade risk-reward ratio is poor. Alright, now let's move to the profit target performance, the trail stop performance, and the stop loss performance. Let me click on the profit target performance. Okay. Here's the premise here. What we are trying to figure out is whether we are locating our partial targets at the right levels in our chart. Okay? By the way, this ratio is calculated based on those trades that we deemed as winners. Alright? We are only going to be taking into consideration for these calculations, or actually the trading journal is only going to be running the statistical calculations on those trades that we labeled as winners. All right. The explanation is that, well, basically this chart tracks how many of our partial targets are hit for those trades that we deemed as winners. Since they are winners, by definition, we should see most of our partial targets hit, right? Well, if you find that the ratio is falling below 0.6, you may want to reevaluate your partial targets policy and to bring them closer to your entry level. Let me try to explain what that means. Well, here on this chart we can see how on average we set 3 partial targets on those winning trades, or on those trades that eventually proved profitable, right? We set 3 different partial taking levels on those winning trades as an average. Now, the average partial targets triggered is also 3 for this particular presentation. That means that every partial target that I place on my trades is hit, okay? And therefore the ratio is 100%, okay? The ratio is 1. Obviously, I wish it was always this beautiful, but obviously you do not always get 100% success ratio on your profit taking levels. All right, more often than not, you will see that the number of profit taking levels triggered is lower, obviously lower than the average number of profit taking levels used, and therefore the ratio is going to be lower than 1. Anyway, that's okay, that's normal, and that's to be expected as long as it doesn't fall below 0.6. In my experience from my own trading records, 0.6 is more or less the level that marks what's acceptable and what's not acceptable. Anything below 0.6, meaning, for example, 0.5 would mean that on your trades, as an average, only 50% of your partial taking levels or your partial profit taking levels are hit. Only 50% of them. So, if this is your Forex chart, that's your entry. Let's say you use 4 different targets, 25% out there, another 25% there, another 25% there, and another 25% there. If the ratio is 0.5, it means that on average, price usually reach only 2 out of 4 before turning around against you. That's obviously not acceptable, okay? You should, because please mind that this is only taking into consideration those trades that we deemed as winners, okay? These are the trades that are actually running our favor, all right? And therefore we should be expecting to profit from more than just 2 partial profit taking levels out of 4, all right? Again, as far as I am concerned, I usually required more than 0.6% in order to, well, label my own performance as acceptable. All right. Again, you cannot expect anything closer to 1. All right, anything closer to even 0.8 would be fantastic. All right, but you cannot always expect that. But please try to keep this ratio, all right, this ratio above 0.6. Otherwise, you may want to tighten in to be a little bit more conservative with your profit taking levels, so to give it higher chances that they are actually reached throughout the trade. All right, let's now move to the trailing stop performance, which basically lets us know out of those trades where we've trailed our stop loss. Actually, we can just read the premise here. Out of all those trades where you trailed your stop loss, either to break even or elsewhere, how many of them actually got eventually triggered? All right, so here we can see how out of those, 4 trades where we trailed our stop loss, only 1 of them out of those 4 actually got triggered. Okay, only 25% out of those trades where we trailed our stop loss throughout the trade got actually triggered. That means that we are doing a good job with our trailing stop. Okay, this is acceptable. Only a 25% of the trades where we secured where we trailed the stop loss, again, either to break even or somewhere else, well, only 25% of those got triggered. So if this is the statistics we get or you get on your own trading journal, this is somewhat acceptable, okay? And therefore keep on trailing your stop loss the way you've been doing it so far. Anyway, I'm gonna cut this video short here. It's already running way too long. You can find another full set of reports down here. This one's based around the trading account, not as per the individual trading systems, but as per the trading account as a whole. Anyway, they are all of them pretty self-explanatory. All right. At any rate, obviously, if you have any question, please don't hesitate to send me an email. But like I say, at any rate, I'm gonna let you guys play around the trading journal. I must stress again that you should be taking at least 15, 20, 25 trades before you can actually extract any statistically significant data out of the reports and out of the charts. All right, so please gather a high or a relevant significant number of trades first, and then start analyzing the reports and start tweaking your trading system or your approach to that specific trading system depending on the data that you've been gathering so far. Okay? Recording your personal trading journal is extraordinarily important. Otherwise, how else could you possibly improve your trading if you don't know the recurrent mistakes you make? If you don't analyze your own trading reports, your own trading records, how are you to find your mistakes, and therefore how are you going to put a solution to those mistakes? Okay? And obviously, the more information you have, the better the trading decisions you will be able to make. Anyway, guys, again, you can find the link to access the trading journal right under this video. Go ahead and start playing with this tool. Cheers and bye-bye.